Hello students, in this session we will be discussing second use of our bill of exchange. Now the second point is when the bill is discounted from the bank. In our previous session we have seen when the bill was kept by the drawer till maturity date, and on due date he used to collect money from the payer. Okay, now in this session we will discuss when the bill is discounted, and this discount is done by none other than our drawer. Now let us see. If the holder of a bill receivable needs money before the date of maturity. Now see here it is said holder of a bill receivable, means it doesn't matter who is the holder of bill receivable. It can be either a drawer or a third party. Okay, so anyone who is holding a bill receivable can discount that bill from the bank. Okay, now if a holder of a bank bill receivable needs money before the date of maturity. Now the date of maturity has not yet arrived, but still the holder needs money. So what he can do is that he can discount it from the bank in order to obtain cash for it. So when he takes that bill to the bank, then he can take cash from the bank. So discounting means encashing, means taking cash before the maturity date, or you can say borrowing from the bank on the security of the bill, means he is keeping his bill as a security to the bank and he is taking money from them. So bank, what they do is that they deduct a certain amount of money as discount, okay, from the face value. So let's say that a bill receivable is of rupees 1 lakh. Okay, then they will deduct some discount, let's say 10%. So 10% of this 1 lakh is 10,000. So the bank, they will deduct 10,000 and the remaining 90,000 they will give to the holder, okay, the person who took that bill receivable to bank. So this 1 lakh is nothing but face value of the bill. Then 10%, that is 10,000, is amount of discount, and pays the balance, that is 90,000, to the person discounting the bill. The discount deducted by the bank is actually the amount of interest charged by the bank for lending the money. Now the 10,000 or 10% is nothing but the amount of interest that bank charges for giving the money. The amount of discount depends upon the rate of interest, means it depends on the rate of interest of the bank. It is not actually fixed by anyone else. Okay, and the remaining period of the bill, means you have to calculate rate of means amount of discount. That we will see with the help of an illustration. Okay, now in this condition also, as we have seen in previous session, then that in bill of exchange we have nothing to do but to pass journal entries in the books of parties involved. So while discounting bill from bank also we have to pass journal entry. So let us see what are the transactions and what will be the journal entries regarding those transactions. Now in this use also we have two parties. First one is drawer, and we are taking example as Mr. X will be our drawer, then Mr. Y will be our drawee or acceptor of the bill. Okay, now let us see when X. Now first transaction will be always for selling goods. Okay, if that transaction is not mentioned in your question, then you don't need to pass journal entry. Then next transaction is when X discounts the bill from the bank. That means after receiving acceptance from Mr. Y, X, he is in great need of money. So what he did is that he discounted the bill from bank. So for that, the journal entry in the book of X will be bank account debit. Now bank account debit means the amount that he will receive from the bank, it will be credited into his bank account. He will receive that money in his bank. So bank account is debited. Then this discounting charges is nothing but the amount of discount that we will calculate then to bills receivable account, because after giving this bills receivable to bank, he is getting money. Okay, so bill receivable is going out from the business, and according to real accounts rule, credit what goes out. Okay, so for this similar transaction there will be no entry in the book of Y, because he has nothing to do with discounting the bill. It is up to X, okay, whether he wants to discount it from the bank or not. He has nothing, Mr. Y has nothing to do with that. So there will be no entry in book of Y. So for the discounting of the bill, as he is not affected by the discounting of the bill. Means when X discounted that bill, Y was not affected by this transaction at all, so that is why there will be no entry in the book of Y. Okay, then next, when Y pays the amount of the bill on the due date, means after Mr. X had discounted the bill from bank, surely there will be one maturity date, and discounting the bill means taking out the money before due date. So this transaction is over. Then when the due date comes, so there will be another transaction, means transaction will be nothing but Y will pay the amount of the bill on due date. So in that time, what we will do is that we will pass no entry in X's book, because bank will receive the payment on due date, not X. Okay, since X has already collected money on due date, he has nothing to do with Y. He will not receive any money from Y. Okay, so no such entry will be passed in the books of X, because he has already received cash while discounting the bill. But in the book of Y, there will be a transaction, because he is going to make payment on due date. So bills payable account debit, normal payment entry that we have seen in previous session, that will be passed in the book of Y. So simply he will just make the payment from his bank account after receiving bills payable from the bank. So in previous session we have seen that on maturity date, our Mr. X, he used to send bill receivable to Y, and after receiving that bills payable, Y used to make payment. But but in this case, means when discounting of bill, X, he will not give bill payable to Y. In this case, bank will pay that bill payable to Y, and Y will make payment to the bank. Okay, so this is the only difference between previous use and this use. Okay, now there is a note: when a bill is discounted, it is more appropriate to debit bank account instead of cash, because the banker does not make the payment in cash, rather the amount is credited in the party's account, and that is why we used to debit bank account. Okay, and as such the amount is deemed to be deposited with the banker. So let us see one example, and we will try to understand properly about this. X sold goods to Y for 10,000 on 15th March 2019. Since I have mentioned the sales transaction, so we have to make journal entry for that. Okay, on the same day, Y accepted a bill drawn upon him by X at 4 months for 10,000. Okay, means on the same day, that is on 15th March, Y, he accepted a bill drawn by Mr. X for 4 months for rupees 10,000. Okay, then what X did was that he discounted the bill on 15th April. He did not wait for 4 months. See, from March till 15th April, it's only 1 month gap. So after 1 month only, he discounted the bill at 18% per annum of discount. Okay, at his bank. So Y made the bill on maturity. So for X, after 1 month only he discounted the bill, but Y, he made the payment on maturity date. So what we are asked in this question is to make journal entries in both the parties. Remember, in this question they haven't asked us to prepare ledger. So what we are supposed to do is that we have to only pass journal entries. Okay, now since in this case we have only two parties involved, that is Mr. X and Mr. Y. So first let us start with Mr. X's journal. Okay, now first transaction will be for selling goods. Okay, so since X sold goods to Y, so Y account debit to sales, because Y is the person who is receiving goods after selling. Okay, so 10,000. Then on the same day, that means Y accepted a bill drawn upon him by X. So Y, he accepted a bill drawn by X. Then he again sent it back to Mr. X. So for him it will be bills receivable account debit to Y, same as previous use. Okay, 10,000. Then again on, see, at 4 months for 10,000, X discounted the bill, so we have to pass journal entry in X's book for discounting this bill on 15 April, because that discounting took place on 15 April. Okay, so we will put date as April 15. Okay, now for discounting, the journal entry was bank account debit, discounting charges account debit to bills receivable. Now let us calculate how much amount of money he will receive and how much amount will be deducted for discounting. Okay, first let us calculate discounting charges, or you can just write 10,000 in the credit. Okay, because we know that the amount of bill receivable is 10,000. Now let us see 10,000, how to calculate discounting amount. Okay, 10,000 into, see in the question they have mentioned that discounting charges is 18% per annum, so we will write 18 divided by 100 into, now for the day. Okay, since earlier we can see that bill receivable was drawn for 4 months. Okay, so after 1 month only, that means if we deduct 1 month from here, still we have 3 months left. Okay, so what we have to do is that we have to charge interest, discount for that remaining 3 months. How can we do that? By writing 3 by 12. Okay, this 3 you have to remember, this 3 is nothing but, we will see the duration of the bill, then we have to see on which date he discounted the bill. So it was just after 1 month from the date of drawing the bill. So when we deduct this 1 month from this 4 months, we get 3. So we will write 3 by 12. So after calculating, we got rupees 450 as discounting charges. That means out of this 10,000, bank will keep 450 and the remaining amount they will give it to Mr. X in his bank account. So 450 will come in here, discounting charges, and the remaining, that is 9,550, will be given to him in his bank account. Okay, so then let us see in the journal of Mr. Y. First entry will be for this sales. Okay, since in the Y he is purchaser, so it will be purchases account debited to X rupees 10,000. Then again on the same date he accepted the bill and sent it back to Mr. X, so X account debit to bills payable. Okay, 10,000. Now we have seen in the table above that while discounting the bill, there will be no entry in the book of acceptor or throwee, but on the maturity date there will be an entry. Okay, so the transaction that we did recorded on March 15 in the book of X, it has nothing on April 15 in the book of X, it has nothing to do with Mr. Y. So now what we have to do is that we have to find out our date of maturity. Okay, now let us see 15 March, 4 months, count 4 months from 15 March, that is 15 April, 15 May, 15 June, 15 July, plus 3 days of grace, that is 16 July, 17 July, 18 July. So our due date is 18 July 2019. Okay, on that day what Mr. Y did was he paid the bill exactly. Okay, so bills payable he received from bank and he paid amount through his bank account, rupees 10,000. Okay, see, after just finishing X's account, what we saw in the note given is that X will not pass any entry on 18 July, that is due date of the bill, because he has already received cash at the time of discounting the bill, and that is why we didn't pass any journal entries on July 18 in the book of X. Okay, now this is meant by discounting of bill. Okay, you can see the discounting charges, that is rupees 450, is nothing but income for bank, or you can say charge for lending money to Mr. X. Okay, now this is how you are supposed to calculate discounting charges. Now for this session we will wind up here, and in our next session we will talk about another use of bill of exchange, that is endorsement of bill. Okay, so if you have any doubts, then you can contact me. Thank you.